1320 WILS, the morning wake-up. Earlier in the show, we touched on the fact that gas prices had dropped a bit here. We're still, though, in the top 5 prices in the country overall, and that's okay for right now because we've experienced the highs and the lows. Overall, though, the recent trend has been bumping, back up. They're down this week, but overall, they've gone back up. Where do we hit that sweet spot where there's enough money be made for the oil explorers out there, the drillers, to go ahead and drill and keep our supply good, but without glutting the marketplace and then seeing basically a cap put back on their profits and ability and desire and motivation to keep doing more? Well, that's always looking for the sweet spot, right? Let's visit this morning with oil industry analyst and the CEO of EnviroLogic Solutions, Baron Lukas, back on the show. Baron, good morning.
Good morning, sir. How are you?
I'm doing all right. Appreciate you being here. Are we in that sweet spot now? Is $50 per barrel, or in the environs, maybe just north of that, is that a great place to be?
Well, certainly just north of that is a great place to be. Right now, it's a little bit volatile, up and down.
Okay.
So a lot of international things going on. The British vote to either stay or exit EU. There's a lot of things happening. What's happening overall, though, is the supply and demand curves are righting themselves. There's still a good outlook for that to be reversed by sometime in the third quarter, meaning that there'll be less oil and more demand. And so price of oil will continue to rise sporadically, a slight upward curve. I suspect $55 to $60 oil by the end of the year. And that's when you start getting in the sweet spot. And it depends on who you ask. It depends on what basin we're talking about. But certainly $55 oil will get people back to work. It will allow some recapitalization of some companies. Some of my drilling friends, I'll be talking about how do I go from 480 drilling rigs working to 1,000 and how many people do I have to employ and all that. So within a year or so, I think we'll be back to about 55, 60. That's a low end of a sweet spot. It could go higher. It could be lower. That depends. But we need to get these Americans back to work, and we need to get the oil field back to work. And we're right there. We're at the cusp of a prolonged, pretty good time for the oil field, and that's good for America.
While still having reasonable prices for the refined product at the pump, right?
Yeah, absolutely. Right now in Michigan, the average is $2.58. The national average is about $2.33, so you guys are a tad higher. But I don't see us getting back. I mean, the highest that I see for you all has been $4.25.
Yeah.
That was back in 2011.
Yeah,
I can't see that happening again. We're not going to go to $140 oil. We're going to go to $70 oil perhaps in the next couple of years.
Yeah.
So $3 at the pump about. Don't quote me on that. But the good news is that right now we are in the driver's seat. For the first time in our history, quite frankly, with the right kind of rules in Washington and the right kind of capitalization, Americans go back to work. We become virtually energy independent. And the average American can, in fact, affect that by going to Crudefunders.com and looking at investing themselves into the oil field. Most of us have retirement plans that are invested in the oil field anyway. Now the average American can invest in the oil field and get people back to work. And frankly, to coin a phrase, make America great again.
You mentioned earlier here that Thursday vote, the Brexit vote. How close are you watching that? How much does that affect what you call the volatility in the oil market? And how much are you counting on that slow bounce back in the Asian markets as well, which were really key to the worldwide, the pent-up demand for oil, which definitely in the last 18 months has dropped off?
Yeah, it certainly has. And there's a lot of dynamics. First of all, the Brexit thing is a real challenge. Germany can't hold the EU by itself. And so if UK exits, then we'll probably have a significant economic slowdown in Europe. That will drive the world economy down, hence oil demand will diminish slightly. But it has bigger ramifications downrange. If the UK stays in, well, we've seen the effect today. The stock market is up, the British pound is up, oil is up. The emerging markets are a different story, and China is a perfect example. China's economy is false. It is a shadow of itself. Chinese demographics mean the aging of Chinese is very, very problematic. And so, by and large, it's a demographic issue globally more than anything else. We have an aging global population, and that will dampen oil demand at the same time that we in America have the ability to become energy independent. So you won't see $140 oil, I don't think, but you'll see $60 or $75 oil, mostly because the world economy growth potential is limited by aging populations.
It still sounds like that's right around where, you don't want to cap it off for a marketplace, but it's right around where we can continue. Everything seems to meet and hit that. You keep using the phrase sweet spot, but there's enough money out there to be made by explorers. There's enough jobs to be had. People aren't paying too much at the pump, and we get energy self-sufficiency. It's a pretty good place to be, isn't it?
Yeah, it's a great place to be. Politics aside for a second, this is an opportunity for America to take care of itself. Literally, just think how different we would be if we were energy independent. We're not obliged to OPEC or other international forces for our own destiny. And I think we're right there. And that's it isn't said often enough. It isn't talked about often enough, but it's the reality. If you draw a circle around Canada, Mexico, and the United States, in a couple of years, with the right kind of rules and the right kind of capitalization, we become virtually independent. And we're not dependent on non-sustainable green energy. Wind, solar is subsidized. It is not economically viable, and that doesn't work. If you can't make money doing it, Americans won't do it, and for the right reasons. So we need to look at what is sustainable, and oil and gas and coal are. We can do that environmentally sound and conscious and still get the job done.
Baron Lukas here, oil industry analyst. I know, Baron, I'll have people on from the green energy side who will disagree with that, but that's what makes the world. You knew that was coming. That's what makes the world go around, and literally it does. He's the CEO of EnviroLogic Solutions. Baron, always appreciate your viewpoint on here, and we'll keep track of it very closely. I know our listeners are highly attuned to it, those in business and those just general consumers out there. Good stuff. Thank you for joining us.
Thank you. Bye-bye.
Appreciate having you here. Keep it here, 1320, The Morning Wake Up, WILS.